Welcome to Bears in Exile. Today is December 17th, and this is the weekend market overview, looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. Okay, well, pretty cool day. Ended up exactly where we started, but it was all over the place here on Friday. Um, Beyond that, we've been talking about the need for the test of the middle of the big candle back here. We definitely got that. Um, so what do I think is going to happen at this moment? Well, at this moment, it looks like a retest of the bar, and we're waiting for it to bounce off. We thought that it would come back down, whether it be to the middle here or to the bottom, and then go back on its way up higher. It certainly appears like that is entirely possible still, and yeah, short-term moving averages coming in for the retest and looking for that bounce off. Now, we do have plenty of bearish indications, and certainly most people are very bearish at this moment. We are below the major price consensus level. We are below the 200-day moving average. We have the middle Bollinger Band above the short-term moving averages, and so taken in consideration with those, yeah, there's definitely a reason to be bearish. Euroland is a mess, and we're going to touch over that with UUP and FXE here in a few minutes. But what else do we have? I mean, are there any bullish indications? Yes. We have the 14-day RSI moving average pointing up, and you can see the fast stochastic also starting to turn around and point up. Slow stochastic as of yet has not started to turn, but certainly this is a really good place for it to do so. So yeah, with those meeting up with the 14-day, getting below it, turning around, and then joining it for its move back up, absolutely that would be very, very bullish. CCI pointing down, RSI pointing down, histogram turning down, and MACD also getting the bearish cross and pointing lower. So we are at a point where we need to see this the stochastics turn around, and I do believe that there is a more than good shot at doing that. That will be fully explained here in a moment. SPX inverse hammer. You can see we've been talking about the potential for a double flatline. Certainly appears to be that at the moment, and there are plenty of bearish things to look at here. For instance, we broke the mid portion of the big candle we had back here. We are below the major price consensus level. We have the middle Bollinger Band above the short-term moving averages. We have the 200-day above us. But indicators, all the same, looking for the turn of the stochastics to meet the 14-day RSI moving average. Not telling us very much, right? Well, here's the VIX. VIX ended with a doji star below the 200-day moving average. Short-term moving averages all pointing down. Long-term moving averages, of course, all pointing down. Down on the CCI, down on the 14-day RSI moving average. Yes, it is oversold. It is not pointing up yet, though. Slight uptick on the RSI, mixed on the stochastics, and down on the histogram and the MACD. We have broken the previous floor. And you know, a year ago, actually it was less than a year ago, but especially a year ago, we were in this tight range with the VIX. Anytime it would go down to 14, it would be a buy, and every time it would get up to 18, 19, 20, it would be a sell. Could we be going back to that range? It is possible. It is possible, especially with that floor being taken out, and taken out pretty well today, actually. So it's just something to think about. We don't have any indication in the secondaries that it's time for it to turn up, but TNA also doji star, and plenty of bearish indications for it. Middle Bollinger Band being above the short-term moving averages. Short-term moving averages sitting at the bottom of the collapsing bearish bar, below the major price consensus level, and of course way below the 200-day moving average. Notice the 14-day RSI moving average pointing up, possibly getting the turn in the stochastics, well, starting to. Up on the CCI, it's kind of sideways on the histogram and the MACD, down tick on the RSI. So looking to see this turn into a double flatline and hopefully break up. Now for the really important stuff that really matters. Here is UUP, the dollar. You can see the excessive separation in the short-term moving averages. We got a downtick today. And the downtick gives us a target. Target just shy of 22.35. More like 22.33. That would be a nice move down and a nice move up for the market. Now here's why I keep saying, or at least in this video, about the bulls having a good shot. CCI still overbought. Stochastics, the slow stochastics, still overbought. Notice the stochastics rolling over. 14-day RSI moving average pointing down. Side tick on the RSI, down tick on the histogram. Slight uptick in the MACD. This definitely looks like it's time for this to roll over, and we have that downtick. So that would be a nice move up. Now realize that next week is a holiday week. We're going into Christmas. There is going to be low volume as people are going to be on vacation, and very easy for the market to be pushed in one direction or the other. Now we kind of have some awful Euro news over the weekend that would totally obliterate this thesis, but if that doesn't happen, absolutely we should have a correction in the dollar, and moving on to FXE, also in the euro. FXE, we have a Dragonfly Doji, I believe we do. Yes, we do. And or you could just say that it is a hammer, a little small miniaturized hammer. I'm not going to call this an uptick, but you can see the excessive separation in the short-term moving averages. You can see the CCI turning around. You can see the rollover of the stochastics and the 14-day RSI moving average. Downtick on the RSI, but uptick on the histogram, and a slight downtick in the MACD. Definitely looks like it is time for the euro to pop back up. And when we do get a uptick, we're looking at 131.5. And if we are going to get an actual complete bar retest, that's way up here at 33.3. That would be a Santa rally in itself if we get either a bubble corrected move or a complete bar retest. Doesn't mean that it has to beat the bar. Doesn't mean it has to get complete crossover and you know, slam into it and slam through it. Just looking for Santa rally next week. It certainly looks like that is more than possible. Moving on to GLD. Now this one is really interesting. We're below the 200-day moving average. We have excessive separation. We have an uptick today. The uptick gives us a target just shy of 162 and is almost a perfect match for the major price consensus level for the previous month. And if we were to go up for a bar retest, that is almost, not quite, but almost a good match for the upper price consensus level for the previous month. Both of those make sense. And yeah, we have this uptick, it going up to the 200-day moving average, which should be resistance of some type, because it does almost match up nicely with the lower price consensus level for the previous month. A lot of people will think that that is just a back test of the 200-day moving average. Well, certainly that could be the case, but I think it would be more likely that we would get a bubble corrective move and it'd go up here to the major price consensus level and then really have some problems. You can see the 14-day RSI moving average is getting to oversold, but it does not have a slant up yet. Stochastics are rolling over. RSI ticking down slightly. Slight uptick in the MACD histogram, and MACD itself pointing down still. SLV, also an uptick. giving us a target a hair above 30. And if we were to get a bar retest, that would match up with the major price consensus level of the previous month. On this one, however, you can see that the 14-day RSI is starting to turn up. Stochastics are at a point where they are trying to turn around. Uptick on the CCI, uptick on the MACD histogram, slight downtick on the MACD, downtick on the RSI. It looks like we are at a point where we should have a reversal. It may not be a major reversal, but I'm only thinking about Santa Rally at this moment. It certainly looks like it is more than possible. Looking for potentials, black box number 1 on the Dow. You can see that we are at the bottom of the minor trend. If we do have a reversal here, and it does go up, we do have Santa Rally, etc., we can see that the potential top of it is at 12,600, which would be a fantastic move. I'm not going to say that 800 points is supposed to happen next week, but regardless, that would be really nice. And if it craps out somewhere around 12,450, that is the upper band of the major trend. So that would be a good place for it to stall out. It would fool a lot of people because we have all of these shorts. Everyone is just piling in at this point, thinking that it's a easy way to make money. If you have a sharp reversal here on low volume in the coming holiday week, push it up, force the shorts to cover, you break the previous high, which causes a lot of people to go on board, only for it to crap out right in this area, and then I would assume fall back down. Now looking at black box number 2, we can also see that we have the minor trend up here ending at 12,200. And that is much more conservative, much more realistic in my opinion. If we are to get a short covering rally, it wouldn't be enough to break the previous high, but it would be a very nice run. Just over 300 points, and yeah, you could do 300 points quite easily, especially if we were to get some kind of miracle Euro news, but I'm not going to count on that. So somewhere in between 12,200 and 12,450 I think is completely realistic, feasible, but we are at the mercy of the news, and further Euro deterioration will be terrible. So be watching closely, carefully, and should we get that rally, might be a good point early on to jump on it, but if the news does not favor that, if it does not happen, then absolutely we could be seeing the bottom of this candle tested like we were thinking. So be quick, be nimble, be safe, and have a very nice weekend. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.